No, well, absolutely, and that has been the heritage of Infosys, right? The talent has been the backbone of the company, as you've always pointed out. But, you know, as a country, we are facing this problem of brain drain at the moment. There are youngsters who are complaining about lack of innovation in the country, etc. And that's quite visible in the IT sector as well. And if I may, the entry packages for the freshers has remained stagnant over the last 10 years, while the pay of the CEOs have been rising to an exorbitant amount, if I may. What's your take on that?
You know, I retired from Infosys in 2014, and I don't take much interest in the company. I don't take that much interest in the industry because I read a lot of physics, mathematics, theoretical computer science, etc. So I am probably not the right person to answer that question. All that I would say is we in India have to embrace compassionate capitalism and make capitalism an acceptable paradigm. And that can only happen if we offer as much of comfort to the people about capitalism, and we demonstrate that capitalism is all about high growth, is all about higher earnings, is all about better salary for everybody, and the leaders will make whatever sacrifice is needed to ensure that the youngsters are not inconvenienced.
Okay, fair enough. That point is taken. But I also wanted to bring out this criticism that Indian IT sector usually faces, and that's the lack of the innovation quotient. In the sense, it's always said whether cloud, artificial intelligence, big data analytics, etc., they all are conceived in the Silicon Valley, and Indian IT just follows suit. Would you concur with that view?
Well, let me tell you my belief. India is a large country. It produces a large number of engineers. And right in 1980, before I founded Infosys, I realized that our charter has to be create a large number of jobs for our people. And I also realized that services sector is the one that will continue to flourish for a long time. Whereas products may come, they may go quickly, because how many products out of thousands that have come to the market have sustained. On the other hand, look at how TCS has grown, look at how Infosys has grown since 2017. I think, therefore, I said we Indians should focus on services for a very important reason. First of all, no matter what systems a corporation in a developed country has installed, it needs to be modified, it needs to be enhanced to keep pace with changes in technology and changes in business practices. Therefore, there's always a revenue stream. Second, even if you have a product that's very popular, you need to build a layer of customization around it. SAP is a classical example. For every dollar of license revenue, probably there were $2 of services revenue. So therefore, right in 1980, I said we in India should focus much more on services, because our charter is to bring happiness to our youngsters. It is not to say I invented some product, okay, I take only a small number of people and then, I don't care, I will make money. That has never been, at least our philosophy, and I think that has stood the test of time. And also in the services itself, remember, we came out with the formalization of global delivery model, we came out with 24-hour productivity, produced a lot of technology for these two paradigms, and then we started creating technology for easy servicing of new paradigms like cloud and AI and others. So while the Indian software industry may not have focused on inventing new ideas, it has been very, very successful in creating the technology for servicing the needs of those new technologies. So I'm very, very proud of it. I'm very proud of it.
But do you think the Indian IT is now geared up to probably take up innovation as well?
Well, let's remember one thing, that as you know, Infosys Finacle is probably the most successful and popular product. But that perhaps contributes about $500 million today.
Oh.
Out of $17 billion of Infosys revenue, $500 million is 3%. So it's not a big deal. So therefore, by nature, I think the top management in most Indian software services companies, they are focused on services, they are focused on making those services better, more of higher quality, better value for money, etc., etc. So therefore, our mindset is one of creating lots of jobs for our youngsters in the country.
Okay, so the main focal area is creating jobs for youngsters as well. But Mr. Murthy, I want to talk more about what you said with respect to services, right? If you were 35 years old today and starting up a new business, would you still look at IT services as your business interest, or would it be something else, manufacturing, VC, platform tech, etc.?
Well, you know, I did my graduate studies in majoring in computer science. I worked abroad in France, in IT applications, in operating systems area, etc. So, given that I am so, I would continue to look at IT, but I would also look at what is suitable for the country, what will help our country, because I am not in it just to say, oh, I'll make some money and then go. That's not the focus. The focus is how can we add value to the country, how can we bring smile onto the youngsters. So therefore, I would say, given that the disposable income in the developed countries are higher, given that in a country like the US, there is a clear acceptance of the role of technology in delivering competitive differentiation, therefore, I would say that my view would be to focus on developed world, to focus on countries like the US and provide software services.
I just want to scratch that point further, if I may, regarding services versus products that you talked about, because what about manufacturing as an industry? Because a lot of people are saying that manufacturing is positioned the way services was 40 years ago, and it could perhaps be the sunrise sector for the next 40 years. What's your take with respect to what's happening for the policy action and how manufacturing is placed?
Well, you know, I would not claim to know manufacturing in detail, but whatever I hear from youngsters, and I interact a lot with youngsters, is that there is considerable confidence amongst youngsters. You see electric vehicles coming out. You know, so many companies have started producing electric cars. Even high quality cars like Mercedes and others have provided electric vehicles in India. Then you have the electric scooters, electric other vehicles. There is considerable focus on autonomizing, bringing autonomy to vehicles, and the manufacturing productivity is improving, and a lot of youngsters feel a lot more comfortable with the manufacturing today than they were 20 years ago. So I think there is a certain confidence in the air, there is a certain positivism in the air, there is a certain can-do spirit in the air amongst youngsters. So that's what I could say, because I'm not an expert in that area.
No, sure, point taken, and that kangaroo, effort is definitely there. But since we are talking about the next big trend, etc., do you think this energy transition could be the next big trend? And have you tried Chat GPT by any chance? That's been making the waves.
Which one is it?
Chat GPT.
Oh, okay, of course. Well, my son introduced me to Chat GPT several months ago, and it is a very powerful tool in adding knowledge to people, and I think it will become very, very useful. This whole talk about banning ChatGPT in university is not a good idea, because the test would be how smart are our youngsters in using ChatGPT to produce very compelling arguments, very compelling articles, very compelling answers. Therefore, we will move to the next orbit where ChatGPT becomes a part of the student's life, but then the teachers will have to modify their stance to differentiate between answer A and answer B in that orbit. Today we are in a lower orbit. So I am a great believer in these technologies, and I think we should embrace it wholeheartedly, and India will be a beneficiary.
So, Mr. Murthy, I also wanted to draw your attention towards what's happening in the capital markets at the moment, right? Do you see any of these new big tech companies, the likes of Zomato, Nykaa, Paytm, etc., being the next TCS or Infosys?
Well, I am first an Indian citizen and then a tech entrepreneur. So therefore, I would want India to make tremendous progress, not just in IT, but in every sector. Now, the companies that you spoke about, they're all promising startups. I want them to succeed. I want them to become bigger than Infosys and perhaps TCS. And that will be good for the country, because as long as they can create productive jobs for youngsters, as long as they can create jobs which have higher disposable income for youngsters, I think it is good for the country. Therefore, I wish these companies my best. I want them to become much bigger than Infosys. That's the only way country can grow.
Well, absolutely. So being optimistic there, but I was reading one of your earlier speeches, and there was a very interesting quote that really caught my attention regarding IPOs, and it was how entrepreneurship is all about deferred gratification. Now, with what's happening in the capital market, do you think the entrepreneurs these days are looking at IPOs as surrogates to funding and forms of instant gratification versus the deferred gratification that they should really look for?
Well, I wouldn't blame the young entrepreneurs. I would blame the older people, because it is the job of the older people, it's the job of the veterans, it's the job of seasoned venture capitalists to advise the youngsters that deferred gratification will result in much bigger wealth for those people. That's exactly what happened in Infosys. In the 80s, there were at least a couple of my colleagues who were somewhat unhappy, in 90s rather, that we had not seen any wealth out of Infosys. But then I advised them, I said, look, if you make sacrifice in the short and medium term, you will reap the benefit many times more than otherwise. So I would not blame the youngsters. I would rather request the veterans in the field, venture capitalists, to advise them on this. That's what I would say.
Fair point taken, because I also wanted to talk about how the last 10 years have been great for Indian startups, right?
Yeah.
There was abundant liquidity, the policy action was positive, but now the tide seems to be turning a tad bit with the funding winter setting in, liquidity becoming scarce, etc. Do you see any kind of moderation in Indian startups, and would you believe this would separate the wheat from the chaff per se?
As I said before, this is all part of business cycle. There was a time when we had boom time in venture capital availability. Now that has become much more difficult. This expected. However, if our entrepreneurs focus on creating a differentiated business value proposition vis-a-vis their competitors, and they are able to communicate well to the VCs, I don't think money would become the problem. However, in these difficult times, they have to realize two important things. One, they have to estimate the market very carefully. Unfortunately, there is no well-established company in India which can estimate the market opportunity. That's a big problem in India. Therefore, entrepreneurs tend to do a not so quality estimation, and that results in overestimation. They should avoid that overestimation. They should go with a realistic estimation, and consequently their expenses should be curtailed, and ideally they should focus on becoming positive in terms of cash flows as early as possible. I understand it takes time. However, they should try. If we did all of that, I don't think there will be any problem.
Just coming back to the point that you were talking about at Infosys itself, how in the 90s there was this lack of gratification per se, but then there were many of these offers made to you at that time when people were willing to buy you out for millions of dollars. At that time, how difficult was the decision for you? And in your own decision making, what role does gut play versus logic?
No, I used to get a very good salary when I was heading the software group at PCS. So I didn't do this for money. I took 1/10 the salary when Infosys was founded, while I gave 20% more to all my younger co-founders. So money was never a part of our calculations, and I'm very, very grateful to my wife for that way of living our life. So I was not very much after encashing little money. I wanted to create a company that would be highly respected, that would be known throughout India, that would be known at least in the developed world as a company that has demonstrated good governance and all of that. So I could convince my younger colleagues that they should demonstrate their commitment to deferred gratification by not wanting to accept this offer. And they were all very, very good people, very, very understanding youngsters, and they all accepted it. That's how we went forward.
So then I'm intrigued to know, what made you then go for the IPO at that point? What was that decision-making marker?
Well, there were a lot of youngsters to whom we had given in the initial round of stock option plan. Later on, we did a bigger one in 1994. And number two, we felt that the true worth of a company is what is determined by the market. The true value of the company is what is determined by the market. We just wanted to conduct an experiment where we would know whether our assumptions of Infosys would be agreed to by the outside investors or not. And that really was the initial thinking.
Well, you did mention that you wanted to understand how the market is valuing the company.
Yeah.
And right now it's about how the entire world is valuing India, because that entire Adani issue has actually been played out and it's getting a lot of attention of global media as well as investors alike. Do you see this impacting the credibility of India and Indian corporate governance in any way?
You know, this is not an area where I have spent any time studying, so I would not be the right person to answer such questions. I think so I would rather.
Sure, absolutely, point taken. But let me talk about Infosys then.
Sure.
Do Nandan and Salil still reach out to you for critical decision making, your expertise?
No, they don't talk to me for any decision. And that's fine with me, as long as they're doing well, as long as there are no governance deficits created, as it happened between 2014 and 2017. And if there is anything that comes fundamentally against compassionate capitalism, they know that I would not keep quiet. They've done a very good job, and I'm very grateful to them. But there is no decision on which they have consulted me so far since 2017, and I don't expect them to.
But since you are one of the largest shareholders of Infosys, are you happy as a shareholder purely in that capacity with the way company is performing?
Oh, absolutely, because since 2017, Salil has done a good job. You know, they have been distributing pretty good dividends, one of the best in the industry. And all that I look at is when I receive my dividend. That's all how I am in some way I'm connected with Infosys. And I think on that count they have done a good job. They have done some buybacks. They have been growing the revenue pretty well. And yes, I think the operating margin is not the same as it used to be during my time. I understand, but that's...
And you've always been focusing on margins a lot during your time. It was very crucial and important for you to maintain those margins as well. But you know, Infosys just completed 40 years, and there was an interesting comment that you made there that initially your thought process was to keep the kids out of the business, but perhaps that's not the best course of action. Should we believe that going forward your kids will play a larger role and participate more in the company? Sure.
After that initial thought, I had discussion with lots of thinkers in the US and a few in India, many in UK, many in France, Germany, Singapore, and they all felt that whatever principle I adopt, that should not come in the way of legitimate opportunity for any youngster. Forget about sons, daughters, nephews, that's not the issue. No individual should be prevented from the legitimate opportunity that is available to him or her as a citizen of this country. They said what I was thinking was wrong. What is important is that they should come through the same channel as the rest of the people. They should demonstrate their worthiness through whatever tests and qualifying examinations and interviews you do, and they should move up the corporate ladder in the same way as anybody else. And you cannot do reverse discrimination. And therefore, I was educated by many corporate leaders, many leaders in the area of leadership, by in the US and in the developed world and in Singapore, and therefore I had to revise, because whenever I hear from people who provide thoughts better than my own, then I salute them, I accept them. That's it.
Well, talking about your kids a bit more, you pointed out that when they were growing up, Infosys was your first priority and family came second. Do you regret any of that? Would you change anything at all?
Well, I regret it because there were, most of the time I was traveling abroad, I was meeting prospects and clients. At home I used to leave at 6 a.m. and I used to return by 9. But within that, whenever I was in the country, I would take, my wife and I would take our children to have dinner with them and get them toys or whatever it is. And we kept them to the extent possible as happy. And my wife did a brilliant job of tutoring them at home. And both of them one did a PhD in Harvard, another did an MBA from Stanford. You can't expect more than that. They did pretty well. More importantly, both of them have turned out to be value-based individuals. And so to that extent, I don't regret. I don't regret because of the extraordinary role that my wife played.
I'll come back to your wife in a bit, but just recently I saw some pictures of you holidaying with your daughter as well as your grandkids in Goa. But what was conspicuous was your missing son-in-law. Is the responsibility at 10 Downing Street keeping him very busy and not able to visit you?
As a foreigner, I don't want to comment on any issue of a foreign country. So therefore, I would like to abstain from making any comments on that.
No, sure, but I was just intrigued and curious. Have you visited 10 Downing Street yet? Any plans to visit soon?
No, again, I don't want to discuss those issues.
Sure. Let me come back and talk about Mrs. Murthy. And there is one story or rather anecdote that I was reading wherein how you and her had an allowance of 300 rupees per month for books, and that was a very strong link between you and her. What are the books that you are reading at this point of time? What's the classic that you would probably recommend to all the youngsters?
Well, I read more of physics, mathematics, and computer science. I don't read management books. I don't read history. I don't read any of those. One of the interesting books that I am reading is the best writing in mathematics that's produced in the US every year. I am reading the 2020 version.
Okay.
Then I am reading a book on puzzles by Martin Gardner. I try to solve some. I take a long time. And then, I look at the answer if I'm not able to do that. And I'm also reading a book on economics in one lesson. But those may not be interesting to most people because they bring me happiness, and that's what I do.
Well, absolutely. And what brought you happiness was also Mrs. Murthy, right? With Women's Day just right being around the corner, anything that you want to say to her or anything for women as a whole, do you think we're doing enough with respect to narrowing the gender gap in the country?
Well, obviously, we have not done as much as some of the developed countries. So we have our task cut out. We need to enroll more women in higher education. We need to enroll a larger number of women in technology and engineering. Though I must say Infosys has done a reasonably good job. I think the year I left, 2014, I was almost 50% were women among engineers. But I think there is a lot of work to do because Infosys is more like an oasis. So that's not the way to measure India's progress. So overall, I think we have our work cut out.
Well, I'll just wrap up the conversation with the last word that I want from you is the career advice coming in for all youngsters. Somebody who's starting out at this point of time, what would you tell them how they should hone their career?
Well, I think we live in extraordinary times for the country. The country is respected outside, unlike in 1980s, 1970s, when India was known as a country of filth and poverty. That's all what the West focused on when it came to India. But today, there is a certain level of respect for India's achievements. There is a certain level of respect thanks to the NRIs who have done extremely well in the developed world, thanks to the entrepreneurs who have done very well in India, thanks to some of the wonderful surgeons here, in other words, India has been recognized as being able to contribute well. So this is the time for our youngsters to work very hard, be disciplined, and take India to the next orbit. And I have no doubt at all that the path is much easier today than what it was in 1980. And we, the elders, will always, cheer them from the sidelines as they run this marathon. And I have no doubt they will do that.
Well, with those pearls of wisdom, we let you go. Thank you so much, Mr. Murthy, for making time and speaking with us today. It's an absolute pleasure.
Thank you very much.
Is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days.
The market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views. And global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days.
The market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views. And global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days.
The market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days.
The market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been
Back with first trades right here on ET Now. Nothing happening on the first trade. So let's take it across to Kunal and Nuresh, find out if there are some charts that they are actually spotting. Kunal, on your Chartbusters list?
So it's Siemens, and I think that stock is looking attractive on the short-term timescale charts as well as on the medium-term charts. Now we were discussing this a couple of days back as well, that how the capital goods space is getting a bit more vibrant with stocks like L&T, etc. doing pretty well. Now we look at the charts for Siemens over the last 1 year approximately. This is June, July 2021. Where the stock started to get into a big uptrend when it managed to break past about the first 2000 levels. The stock has this odd tendency of going into strong uptrends, but within an uptrend, there are phases where the stock enters into a multi-month consolidation. So as you can see that the stock entered into a multi-month consolidation. This was something which started off from December 2021 towards June 2021, a stock which remained into a range. Once the range gets broken out, the stock moves into a much higher scale into an upward trend. Now you look at the charts very recently over here for Siemens, again a very similar kind of a range bound price action for the stock. The only good part about this range is that the lows which were made were much higher, something which was completely different than the last time when the stock was consolidating. This time around, in this range, the stock made a higher low for itself and it's confirmed a breakout. This is almost a 400 point breakout for Siemens at 3,100 mark. So if you try and do that math, we could probably be looking at 3,400 to 500 as an immediate target for Siemens over the next 2 to 3 months.
Right. Naresh, what about your chart buster?
So that's the chart for Indraprasth Gas Limited, IGL. So if you look at the last 6 months data, the stock has every time come back to 440, 45 levels and has found a resistance over there. But over the last 4 to 6 months, what has started happening is we've started making higher bottoms. So from 380 towards 400 to 420 now. So the base is getting higher, and there have been at least 5+ attempts around that 445 mark. Today also the stock made a top around 445. Once it can break above 445, it should take a quick move towards 480 to 550 levels in the short term. Risk reward is in place, so a stop loss at 425 and a target price of 480 to 550 in the short term.
All right, let's get some tweaks as well going, and Kunal, identify your top calls.
So the first one is IEX, and after quite some time the stock has come back into the radar, forming a major bottom at the 125-130 range, which suggests a buy on IEX, targets of 150, stop loss at 135. And the second would be a buy on Tata Power. Even this stock is trying to inch back towards a breakout of its 50-day moving average. Would expect this momentum to continue, targets of 220, stop loss at 200.
Okay, let's find out what Naresh is picking out as his top recommendations. Naresh?
So another gas name, Mahanagar Gas, which has a similar breakout at 910 levels, a stop loss at 875 and a target price of 1050. Second is a buy on Wipro, which is a good bounce back candidate, a stop loss at 398 and a target price of 440.
All right, there you have it. Lots of stock ideas. Then let's take a very quick break with news that we're at 17,900 on the index. Be right back with lots more.
Thousand points in just the 9 days.
Motor market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days.
Motor market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days.
The market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days.
The market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with
Not much happening with the equity markets, but what about commodities? Vinny is here to fill us in on that. Vinny?
So this morning we are seeing that the oil prices have given up those gains we saw coming in yesterday. Yesterday it gained more than 1% in trade, but yes, now oil prices have seen a bit of a decline. Ahead of obviously several cues we'll be seeing and watching out for coming in from the US markets and US monetary policy data points coming in this week, as well as in terms of the strengthening dollar. That's a factor that is coming into play for the oil prices as well. Brent crude oil prices are a bit weak in trade. Moving on to the gold prices, they continue to hover around actually below the $1,850 per ounce mark. Especially, this is the weakest level that we've seen coming in for the gold prices in almost 7 weeks. Other than that, aluminium, that seems to have gained momentum this morning as well. Output cuts seen in Yunnan and signs of falling aluminium ingots social inventories is something that we are keeping an eye out on. Other than that, lastly, we have zinc that has also seen a bit of a gain coming in as inventories of zinc ingots across China have seen a bit of a decline coming in versus the week earlier. So on the back of that reduced inventories there, we are seeing increase in zinc prices.
So much for highlighting all the latest on Commodity Corner. Moving right on then, UPI and of India and Pay Now of Singapore, they're going to be linked in order to enable faster and cost-efficient transfer of cross-border remittances. The Prime Minister Narayana Murthy as well as Singapore's Prime Minister are going to virtually witness the launch of this cross-border connectivity. Let's understand a little bit more about how seamless transactions are going to become. My colleague Sharad joins in with the latest. Sharad.
Well, yes, it's a matter of pride for the UPI ecosystem of India going global, and an important meet coming today at 11 a.m. where Prime Minister Modi as well as RBI Governor Shaktikanta Das would be present. Now, the important thing is this launch would be there between the two digital eco-payment systems between India and Singapore. This includes UPI from India and Pay Now from Singapore. Apart from this, a lot of important news flow is coming in the UPI ecosystem, especially on the global front. And let me just point out the first one being RuPay has actually launched a first credit card on the UPI ecosystem. Apart from this, PhonePe has also become the first fintech to actually allow UPI payments by Indians abroad. And do remember, Paytm Payments Banks also has a license for it. Now, as per NCPI, almost NRIs from 10 countries can do their UPI payments without having Indian numbers. And also Ebix, which is a listed company, their arm Ebix Cash becomes the first company to launch UPI for foreign travelers coming to India. And lastly, the main company Paytm in the third quarter results as well, the payments revenue went up almost 34% on a year-on-year basis, and this also includes the UPI incentive. So a lot of important news flow coming in over the recent weeks on the UPI ecosystem as well. But now let's look at the total values which have been transacted and see the numbers going up. The numbers have been increasing steadily and almost hit 13 lakh crore mark in the month of January itself. But the question is, how much does UPI contribute to the total digital transactions in India? And that number is on the positive side of 52%. Now, there are some important triggers going ahead for UPI, and the first one, of course, being is India is pitching for a stronger framework amongst the G20 nations. Apart from this, the regulatory challenges are also there, which will be discussed with the fintechs going ahead.
Right. And, you know, Bitcoin, Sharad, that's also managed to cross $25,000 once again, the first time since June 2022. Other cryptocurrencies as well have seen a bit of a rebound coming in. What's more here?
Well, yes, in focus, we are having Bitcoin with almost touching the $25,000 mark, and they have touched it for the first time since June 2022. From the November lows itself, we see it's up almost 60%. And looking at the global crypto picture, that is also up 2% over the last 24 hours, with the market cap going above the 1 trillion mark. Now, apart from this, there are important reasons why we are seeing a strong rally in the cryptos. And of course, the first one being is the worst of monetary tightening might be over. And the analysts are also estimating that the largely regulatory headwinds impact has also been factored in. Now, you couple that up with the absence of major macro catalysts and also fall in the equity volumes, and that is where the interest in cryptos is coming back. And this is a kind of a volume push as well as a technical level push, and that's what the experts are stating. Now, looking at the crypto rise in numbers, let's take Bitcoin, Ethereum, Binance, all of the major currencies, they are up between 8 to 15% over the last 7 days itself. Now, looking at the key triggers going ahead, and of course there are some important triggers coming, and that's coming in the positive side. First one being, of course, the Bank of Russia is expected to start their digital ruble. And apart from this, even Hong Kong is proposing rules for crypto trading platforms. And the last important thing being San Francisco's federal bank, they are also expecting to roll out a central business digital currency.
Thanks very much, Sharad, for giving us all of those details. Moving right on then, the Power Ministry has invoked Section 11 of the Electricity Act again, which now permits imported coal-based power plants to operate at full capacity. This act will also allow plants to sell additional power through exchanges. Let's get on board my colleague Prakash Priyadarshi. He's joining in with all those details. Prakash.
Yes, Power Ministry has invoked Section 11 of the Electricity Act yet again, like last year, to meet increased power demand in the country. As per the order, all imported coal-based power plants, including those in NCLT, will have to operate with full capacity. As per the Power Ministry's assessment, peak hour power demand may touch roughly 230 gigawatt during month of April this year. So, taking into consideration, Power Ministry has decided to invoke emergency clause of the Electricity Act to meet increased power demand. All imported coal-based power plants will be allowed to sell additional power they produce through power exchanges. However, first priority will be given to DISCOMs, power generating companies have power purchase agreement. A committee will be formed where officials from Ministry of Power, CA and NTPC will be there to fix variable cost or tariff in case of high cost imported coal that will be passed on to PPA holder. In case of DISCOMs, where PPA is there but it refused to take power on revised cost, then power plants will be allowed to sell that quantum of power through power exchanges. If a power plant has multiple PPA with DISCOMs and any of them refuse to take power on revised cost, power plant will be allowed to sell power through power exchanges, and profit will be shared between